Good morning, everyone. Thanks for joining us again on another weekly call. I just want to warn, we do record these calls, so we're going to go ahead and record. And so if you don't like that, then you just have to climb off. But yeah, we'll continue with that as normal. I'm just standing in this week for Sarel. He could unfortunately not join us today. We'll be looking again at one of the gold companies, Harmony Gold, and Marnus will take us through this one. Before we start with the recent news, I think it's a lot more. Well, we have the standard tariffs just continuing, but more recently, it's more budgets yesterday. So the US faced some pressure in the markets due to on the budget sides there that they're proposing. And then also on our side, we had our budget, third draft. But now at least ours was a bit more of a boring standard one. And, you know, I think when it comes to budgets, that's how you want them. Just should be boring, no event type of one. So that's what happened here recently. And then without further ado, I'll now hand over to Marnus, who will take us through Harmony. Thanks, Marnus.
Thanks, Pierre. Welcome everyone to today's call on Harmony. We will have a look at the macro environment today, the price movement. We'll quickly have a look at the gold price drivers. We'll take a look at the industry, how the miners have performed relative to each other and to one or two others that's offshore. And then the all-in sustaining cost of the local miners. And then Harmony's financials. They released operational performance for the 9 months ending for the financial year 2025. We'll quickly glance over that, and then consensus view for the full financial year. And then Harmony's intrinsic value and recommendation remains a hold. And intrinsic value has moved a bit up, but that's due to the adjustment with the gold price moving for 2025. So relative gold price performance, you can have a look here. It's quite moved since 2024. There's a few price drivers that we'll have a look at now that explains the increase in the price of gold, and also the outlook. There's some banks, specifically in the US and Europe, that expect the gold price to move further for 2025. But that will also come with something driving the gold price. You'll also see the dotted line there at the bottom. That's your 200-day moving average line, and that sits just below that $2,800 per ounce mark. So if we look at this chart, this is a gold price movement for the last 3 years. You'll have a look at the red block there at the left. That was the increase in the gold price due to Russia invading Ukraine. Then your second block, red block, is rising interest rates globally. So as rates increase, the cost to hold a non-returning asset or non-yielding asset like gold usually allows for the price to decline because it becomes more expensive to hold gold. Your third red block there, or the second one from the left, that was when bond yields started to decline. So it was anticipation of a declining interest rate environment, which then creates the opposite. It becomes more cheap to hold gold. And then your last red block was actual rate cuts globally taking place. So you're on the left, your second last arrow there. That was to the end of 2024, was when Trump was selected for his second term as the president of the United States. And that created a bunch of uncertainty, and that's why gold from there increased. It came back slightly, and then from January 2025, it just jumped completely. So the rise in gold price at that point is there's a few factors playing here. So there was a tariff threat from the Trump administration, and then that actually took place, which further drives the gold price. There was also the US threatening to withdraw from Europe for defense and the support on defense, which created uncertainty further for the likes of Russia further invading Ukraine and other neighboring countries. And a large other portion of it was a decline in the dollar. So your dollar is usually your safe haven asset or currency, if you would. And a declining US dollar means in foreign currencies, because the gold is denominated or priced in dollars, it becomes cheaper. And that also drove the price of gold further. Here you can see the chart on the left. So that's since 2010. You have a negative correlation with the dollar index and the price of gold. Your black is the dollar index, and your blue the gold price. And as the dollar index declines, the gold price usually goes up a little bit, and that is a negative correlated. But if we zoom in a bit on the right, you'll see that between December and January, that's your 2025 start, the dollar kind of peaked at 110, moved down to just close to 98. But in the same time, the gold price went from $2,600 per ounce, moved up to where it is now and higher. So that's a perfect example of how negatively correlated it is. And a large portion of that is because of a portion of the gold price drive was due to the dollar index declining, and then uncertainty, which is the next point. If you look at your gray line there at the bottom of the chart, that is your uncertainty, and it shows that there's a global uncertainty to the end of 2024 when Trump was elected, and that just echoes the drive for the price of gold, which completely just spiked in 2024 and further in 2025. The top chart is your World Uncertainty Index, which is GDP weighted. And the uncertainty levels is becoming close to where it's almost peaked in the COVID period in 2020, sorry. And then also, if you look at your kind of a crash in 07, 08, financial crisis, it's completely outperformed in terms of uncertainty, which is also just a gold price driver at the moment. Your bottom chart, that's your economic policy, uncertainty in the US, and that's also sitting at all-time highs. If you look at this chart, which is from 2020, mid-2022 now, and that's uncertainty relating to tariffs, taxes, and as Pierre mentioned, the most notable recent data looks like there's a bit of uncertainty in the bond market in the US with interest rates climbing, which is causing a bit of debt concern and the cost of debt in the US. This chart is SA gold producers' relative performance to each other and also global gold producers. You can see there AngloGold Ashanti there, the top performer, that's your light blue line at the top. Harmony kind of there in second place if you look at the SA producers, and then Gold Fields as well. They are outperforming the other gold producers globally, and they're doing quite well. There's a bit of a USD ZAR exchange rate that also helps these gold producers because they sell in dollars and the rand is naturally usually a bit weak. They get good rand prices for their gold sold. All-in sustaining costs, the gray bars are your most recent data. So if you have a look at that, Harmony had a spike in all-in sustaining costs. We'll get to their numbers now. So they are the most expensive producer at the moment, but they also had lower production numbers, which was one of the drivers. So that caused the price to increase, but they are the most expensive at the moment. If we look at the financial data and the trading statement updates and production update they released for the 9 months for FY25 versus the 9 months FY24, the average gold price received increased by 30% to just below that $2,500 per ounce mark. And in rand terms, that's up 25%. The gold revenue increased by 20%, so that's just revenue received from gold. Your production declined by 6%, and that was mainly because of impact because of the severe rainfall that we had in SA. We had quite a bit of rain in this rainy season up north. And then your underground recoverable grades improved to 6.28 grams per ton, which is a 2% increase from the 6.16 grams per ton it had in the previous period. And then there we go, your all-in sustaining cost increased by 17% in rand terms, and in dollar terms by 21% to $1,765 per ounce. So the margin there is quite good. If you sell at $2,497 per ounce, and your cost is only $1,765 an ounce, and where the gold price is also sitting now, that margin should only expand as your realized price comes closer to where the actual spot gold price is at the moment. In terms of all-in sustaining cost in rand terms, it's still well within the limits. That's your guidance down below. We'll get there now. The full year results is expected in mid-August 2025. Consensus for 2025 is for revenue to rise about 22.5%, with earnings per share expected to rise about 72%. So the anticipation is also a bit of a divvy that should be paid there at some point because of the good cash flow that they should show in 2025. So guidance for the full 2025 year, production is still in line with what they've expected. Nothing changed there. Your all-in sustaining cost is, as I mentioned there, is still within those limits, so that's perfectly fine. Although it jumped, it's what they expected. And then underground recoverable grades was the only change in the guidance. It went from 5.8 grams per tons to 6 grams per tons, which is wonderful for their production numbers. And then the capex is still, as expected, at 10.8 billion rand. If we look at the valuation of Harmony, you have your bear base and bull case, with probability of the base case at 70%, bull at 15%, and bear at 15%. That gives you a weighted intrinsic value of 246 rand per share, which is at the point when the valuation was done, a 7% downside to the share price. The weighted intrinsic value did go up with the amendment of the price of gold at the moment. It's also important to note that these companies are very sensitive to exchange rates and also the gold price. For instance, if we take the gold price at $3,500 per ounce and we keep that flat for 4 to 5 years, just at that price, so that's the realized price they get, with a exchange rate of 1830 and the same probabilities, this intrinsic value goes to 393 rand per share. So it's very sensitive to the price of gold, obviously, because it's a gold producer, but management, the only little bit control they have really is on the cost side and the capex side, and that just needs to be spent well. And that brings me to an end in my presentation. I will hand over to Sean that will do the technical analysis for us.
Yeah, good morning, everybody. Yeah, you can see the chart there again of Harmony. That was until yesterday's close. So you can see there that the share price is trading just below its 20-day moving average and just above its 50-day moving average, but still far away above its 200-day moving average. So both the medium-term and the long-term trends remain bullish. Saying that in the short term, the share price has recently rallied off that support trend line, which is close to that intrinsic value that Marnus just said now of 246. But also you can see that the share price is trading within, call it a symmetrical chart pattern, where it's now testing the upper resistance trend line. This together with that 50-day moving average may present a short-term resistance barrier, and I see today that the share price has come off a bit. It's down to 271, so it's about 1.5% off. But saying that, still, you know, the MACD indicated at the bottom there, the oscillator, it is trading just in oversold territory, but still below its trigger line. So with no clear bullish signals yet, it's very, very close. I presume it will give a confirmation today. You don't see it on this chart, but other shorter term technical indicators such as the stochastic give a bullish signal. With today's little pullback, I don't know, I think it might be a bit more prudent to wait for the share price to retest that lower support trend line, maybe for a better entry point. But all in all, I still think it's worth a nibble, and that's how I see it. Thank you.
Thanks, Sean. Thanks, Marnus. Some good insights there. I appreciate that. Yeah, I think it's a tricky one. You know, gold or these companies is all dependent on the gold price. And as Marnus showed, also the uncertainty is quite a lot now. I think in the normal circumstances, people struggle to forecast commodity prices and economic outcomes. And as you can see, the uncertainty currently in the world is quite high. Yeah, so I think it's an interesting one, this Harmony. As we usually do, we open the floor for if you have any comments or questions. So if you do have, please feel free to unmute yourself, ask the question directly, or you can just type it in the chat. That's also that should also work. Richard says hi. Maybe he has a question, or he's just saying hi. Okay. Yeah, he just asked, what's your preferred gold stock, if you have a preference. And then Frederick Smith is also asking what's your preference between Harmony and DRD. Yeah, he didn't see DRD on your list comparison there.
Thank you for the questions. At the moment, we prefer Goldfields a bit more over Harmony. Harmony's got a bit more exposure to SA, and also Harmony is diving quite deep at the moment with their mines, which becomes more expensive. They're also having a bit more of a depletion in their mining operations, which the outlook is a bit more risky with the deeper they go. So in that sense, we kind of prefer Goldfields a bit more. And then the other question on DRD, yeah, Harmony, DRD, still think probably then Harmony in that end, but DRD I'll add to the next slides and look a bit more in depth, so we make sure that we cover that one for you as well. But yeah, in that sense, I think Harmony is still a good option there.
That's how we usually view it. Also in our portfolios, we try to, because you're at the end of the day, you're buying the gold exposure. So when we choose between them, it's more of a, minimizing your risk type of view than it's necessarily on a valuation front. Because a valuation front for a commodity company, it won't hold up. It doesn't help if it looks cheap. Let's say on a dividend yield that's high. But if the commodity goes, the price, the dividend is also going to go. So then it doesn't look cheap anymore. So we're a bit more focused on the quality and lowering our risk just when we choose between the companies. So that's just a bit of a extra insight. Are there any other questions, perhaps? Doesn't look like there are any more questions. If I look at our calendar, it seems next week Marnus will be here with us again. He's becoming quite the local on this channel here. So yeah, next week again, Marnus, but this time he's gonna show us a bit what he thinks about Renogen. So that's gonna be interesting one. There was some recent news, so I think probably a lot of people would like to attend that one as well. So I'm just going to give it a last chance if there's any questions. Sean, is there anything else I missed perhaps? Or?
No, done. Cool.
Okay, then that's it. Thanks everyone. Thanks for joining. See you next time.
Thank you guys.
Cheers.
Cheers.